XRP is once again sitting at the center of one of the biggest conversations in crypto. And this time, the story is not only about price charts, hype, or another short-term market reaction. The bigger story is adoption, regulation, tokenization, and whether the XRP Ledger is quietly becoming part of the financial infrastructure that central banks, institutions, and global markets are testing in real time. The Reserve Bank of Australia recently ran real pilot wholesale CBDC activity through blockchain networks, including the XRP Ledger and Hedera, as part of Project Acacia. That matters because this was not an old proof of concept from years ago, or some recycled rumor floating around social media. This was tied to a recent official report, and the use case involved tokenized assets, bond life cycles, settlement, custody, and RLUSD. The goal was to test what actually works when digital central bank money, private money, and tokenized financial instruments exist together in wholesale markets. And when you see names like Ripple Labs, Chainlink Labs, Fireblocks, JP Morgan Custody, brokers, exchanges, and tokenized bonds appearing in the same conversation, it becomes very hard to dismiss this as ordinary crypto speculation. At the same time, Ripple is appearing on major disruptor lists, ranking among companies connected to the future of money and blockchain infrastructure. That matters because banks and corporations pay attention to those signals. When financial institutions need to upgrade old systems, reduce friction, improve settlement, and explore tokenized assets, they look for companies already proving they can operate in regulated environments. Ripple keeps showing up in that conversation. The UK is also moving toward a clearer vision for tokenization in wholesale markets, with the FCA and Bank of England giving firms more confidence to explore the technology. Ripple's history with the Bank of England goes back years, and with recent discussions between the US and UK around digital asset infrastructure, many XRP holders are watching closely to see whether Ripple and the XRP Ledger could play a role as markets evolve. The same kind of movement is happening in Dubai, where Ripple and the XRP Ledger are tied to government-backed real estate tokenization involving property title deeds on public blockchain infrastructure. This is why many investors believe XRP is no longer only a retail-driven asset waiting for a price pump. It is becoming part of a larger discussion around tokenized securities, real-world assets, central bank testing, institutional custody, stablecoins, and cross-border settlement. The price may not reflect all of this immediately, and that frustrates many holders. But in crypto, the most important developments often happen before the chart reacts. Adoption begins quietly. Pilots turn into frameworks. Frameworks become production systems, and then the market eventually realizes what was being built in plain sight. Wall Street and institutional behavior around XRP is becoming harder to ignore because the signals are no longer isolated. On one side, some headlines say Goldman Sachs sold its XRP ETF exposure and that holders should panic. But another interpretation from the provided material is that this may have been trading desk activity, market making, client liquidity management, and routine rebalancing rather than a final judgment against XRP itself. At the same time, XRP ETF products still showed strong inflows, even while Bitcoin and Ethereum saw heavy outflows in the same period. That is the detail many people miss. When a large institution exits and the market still absorbs that pressure, it suggests that buyer demand may be deeper than one single Wall Street position. XRP ETFs have already locked up more than 1 billion XRP in custody within months. And that supply story becomes more important when retail has not fully returned yet, and global ETF approvals in markets like Japan and South Korea have not arrived. Meanwhile, exchange data showed XRP withdrawals rising while deposits dropped, suggesting more holders are moving coins away from exchanges instead of preparing to sell. That creates the kind of supply pressure XRP supporters are watching very closely. But this story is not only about ETFs. Tokenization is accelerating across major financial markets. The DTCC has been discussing production-level tokenized infrastructure, regulators are working on frameworks for tokenized securities, and institutions are no longer treating blockchain as a distant experiment. From tokenized stocks to digital collateral, from public blockchain settlement to real-world asset inflows, the entire conversation is shifting toward production. The XRP Ledger's real-world asset activity, stablecoin volume, RLUSD growth, and tokenized asset movement are all part of that bigger picture. Even if Ethereum still leads the broader tokenization market, the material shows XRP Ledger momentum growing quickly, with real-world asset inflows and represented value expanding. This is why some XRP holders believe the current price is not showing the full story. Utility demand, ETF inflows, institutional testing, tokenized assets, and regulatory progress may not create instant price movement every time a headline drops, but they can strengthen the foundation underneath the market. And when central banks, global banks, market infrastructure providers, exchanges, and payment firms begin testing or discussing blockchain rails seriously, XRP becomes much harder to dismiss as just another speculative token. At the same time, not everybody in the market agrees on where XRP goes next, and that tension is exactly why this phase feels so important. Some investors believe crypto is entering another major correction cycle where Bitcoin could revisit much lower levels and altcoins could experience another wave of fear before any true breakout happens. Others believe institutions are already positioning underneath the surface, while retail remains distracted by short-term volatility. And honestly, both sides are watching the same market through completely different lenses. Retail traders often react emotionally to candles, headlines, and sudden pullbacks. Institutions usually move slower. They research, test infrastructure, create liquidity pathways, work through regulation, and build exposure long before the crowd fully understands what is happening. That is why many XRP holders continue paying attention to things like DTCC working groups, ETF structures, custody solutions, tokenized securities, RLUSD adoption, central bank pilot programs, and blockchain settlement systems. The market itself is also entering what many describe as a transition period. Stablecoins brought the dollar on-chain. Tokenized securities appear to be the next major chapter. Financial firms are openly discussing blockchain settlement, interoperability, public chains, and reducing fragmentation between systems. The DTCC repeatedly emphasized interoperability, liquidity efficiency, and avoiding fragmented markets because liquidity fragmentation hurts both institutional and retail participants. And when those conversations happen, XRP, XLM, Ethereum, Solana, and other blockchain networks naturally become part of the discussion around which infrastructure could support future financial systems at scale. Ripple's long-term positioning inside banking, payments, tokenization, and settlement keeps XRP involved in many of those conversations globally. In Australia, there are wholesale market tests. In Dubai, tokenized property infrastructure. In the UK, discussions around wholesale tokenization frameworks. Across exchanges and institutions, ETF flows and custody products continue expanding. Even companies and financial leaders that were skeptical years ago are now testing or interacting with blockchain systems more directly. And that is why many investors believe this cycle feels different from previous crypto cycles. The market still experiences fear, manipulation accusations, macro pressure, inflation concerns, and geopolitical uncertainty. But underneath that noise, adoption continues building quietly. XRP holders continue debating whether price suppression exists, whether utility will eventually dominate speculation, and whether institutional positioning today could lead to a completely different market structure years from now. Nobody can guarantee outcomes, and even the most bullish voices admit there will still be volatility, corrections, and uncertainty ahead. But one thing becoming increasingly difficult to ignore is the amount of infrastructure, regulation, testing, tokenization, and institutional preparation now surrounding blockchain technology. The conversation has moved beyond whether blockchain survives. The discussion now is about which networks become part of the financial plumbing of the future. And that is exactly why so many people continue watching XRP so closely right now.